Hi everybody, Joe Conroy here, financial advisor, and today I've got a very exciting topic that I want to bring to you, and that's the topic of long-term care insurance. Now, I know it's not a very exciting topic and one that most don't really want to cover, but it is extremely important because the risk of long-term care in an event and the havoc that it can wreak on your retirement plan, it can really blow up your retirement and your financial future. So it's important to at least cover, even if you're not going to do anything about it. You need to have an understanding. So, we all know what long-term care events are. It's things that will send you to the nursing home or keep you from doing the daily activities that you are planning for in retirement. But what I'm going to cover is the different ways that you can offset and mitigate that risk and hopefully cover it to keep your retirement or your spouse's retirement on track. Because a long-term care event usually affects the surviving spouse more than the person that has the qualifying long-term care issue. So what are those three different topics? Let's go through them real quick. So today we're going to go through the three different options, and we're going to go and look at things from a very high level. Obviously there's a lot more details, a lot more intricacies that you need to be aware of when you're making your final decision on long-term care planning. So please contact a qualified advisor that can help guide you through that. We do it for our clients on an almost daily basis. So if you don't have somebody, feel free to reach out to me. I'd love to answer some questions for you. But what are those three options? One, self-insurance. So that's the option of not buying insurance. It means that you've got enough money set aside to cover a long-term care event. A lot of times people don't have enough money to cover a long-term care event, and that's where a long-term care event, getting sick, something will blow up the retirement plan. Option number two is buying the type of insurance that most people are familiar with when it comes to long-term care. I like to call it the use it or lose it option. What I mean by that is either you will use the money for a long-term care event and you will get money in the form of benefits, or you lose it. Those premiums are going into the insurance company's pocket. If you don't have a qualifying event, you don't make a claim, they get to keep 100% of the premiums that you've paid. A lot of people, it doesn't sit well with them. I will tell you that the benefit of that type of product is it offers the most benefit per premium dollar. So it is the most efficient if you know you're going to have a long-term care event. Option number three is use it or pass it. So it is a kind of a hybrid type of policy where it's built on a life insurance platform. So what that really does, without getting into the weeds, is it will give you benefits for long-term care, not as much as use it or lose it, but it'll give you benefits for long-term care. Or if you don't have a qualifying event, you never make a claim, it'll pass all or a portion of your premiums to a beneficiary that designate. That could be a spouse, it could be a child, an adult child, it could be grandkids, it could be a charity, it could be any number of things that you want. You might want to talk to somebody about what makes sense for you. So, in summary, the three different options are self-insure. And a lot of people, that means that they just stuck their head in the sand and they don't want to think about it. Other people might put some thought into it and think, I will set this aside for a long-term care event if it happens. Option number two is the use it or lose it. Again, I'm overgeneralizing here, but I want to paint just a clear picture. Or the use it or pass it hybrid method. And that's really new within the last maybe 5-10 years. We've seen it kind of gain steam, pick up steam rather. And I think if that will get someone over the hump, the mental hurdle of getting a long-term care policy, knowing that the money is going to go either to benefits or a loved one, then do that. Even though you're going to pay a little bit more for it, you'll get a little bit less in the way of benefits. That's better than nothing. So those are the three main options. And I know long-term care isn't a very exciting topic. It's one of those things where you just want to do the homework, get whatever necessary coverage you need, check the box and move on so that you can do more fun things like planning vacations and maybe paying for your grandkids' college or helping out loved ones or whatever it is your goals are in retirement, rather than funding a medical event. So thank you for watching. I hope you found this video informative and helps you on your retirement plan. If you did, please like and subscribe. I would appreciate the support.